Warren Buffett is one of the most successful investors in history. In this video, I'm going to show you what he's doing with his portfolio and what it means for the market. After all, the easiest way to become a better investor is to follow the best in the world at it. Hello, this is Estate Financial with an episode of Top Investor Watch, where we bring you inside a world-class professional's investment portfolio and focus on the changes they're making. This episode is about the greatest value investor of all time. Value investing has come back in fashion the last 2 years because it works. You can see Buffett's performance against the S&P 500 is almost 100x. You can't deny he has a better idea than most what to invest in. Let's look at his portfolio now. You can see that he has become well diversified. A few years ago, he began buying stocks in various industries such as technology and healthcare and gold. He's always owned lots of financials and consumer goods. But what are his most recent moves? Over the last 3 months, Buffett hasn't added any new companies, but he has been adding and reducing positions substantially in many of his holdings. Let's take a look first at the positions he's increased. Louisiana Pacific Corp., Paramount, Apple, and Occidental Petroleum. Since everyone already knows Apple and probably knows Buffett likes his energy companies, I am going to focus on the other two, Louisiana Pacific Corp. And Paramount Corporation. First, let's look at Louisiana Pacific Corp. A Tennessee-based construction materials firm, they hold a leading position in the global market of oriented strand board and other engineered wood construction products. They offer siding, wood products, framing and paneling to homeowners, contractors, and builders. Some important numbers on LP. With a market cap of $4.05 billion and a PE ratio of 4.69, when the industry average is 9.10, Buffett's stake is worth $417.1 million. LP's business can vary quarter to quarter due to fluctuations in the home building industry caused by weather, mortgage rates, and average house prices. That said, the company brought in $852 million in net sales for the third quarter of 2022, down 36% from the year prior. Although it did handily beat the $1.50 EPS forecast. The company had $482 million in cash at the end of the quarter. They have superior product in its siding, which has potential for market share gains, especially in the repair and remodel segment. Its balance sheet remains strong and an improved product mix in the future provides more opportunities. This purchase indicates Buffett believes the housing market has finally bottomed out. While housing inventory remains low, it has started to climb, indicating that buyers and builders are regaining confidence in the market. Next, Paramount. In 2022, Paramount stock sold off almost 14%. In the first quarter, Berkshire Hathaway purchased 68.9 million shares in the company that was worth about $2.6 billion at the time. Likely driving the purchase was Paramount's exposure to both traditional media and streaming. Through its CBS network and Paramount Plus streaming service, Paramount has both covered. Its streaming alone has 40 million subscribers. Paramount also has a considerable moat because of its film library. The intellectual property it has built up over the years can be monetized through ongoing distribution, as well as sequels and remakes. Paramount has the kind of sturdy fundamentals that Buffett loves. In the first quarter, revenue was $7.3 billion, down just 1% from the same quarter the previous year. The company's direct-to-consumer segment had a stellar year, growing by 82% year over year. Although its free cash flow has been trending downward from a peak in 2017, Paramount is still producing an ample supply of cash. The crowning consideration for Buffett is always value. Paramount stock is trading at a forward P/E of 11.5, when the industry average is 29.9. The purchase of Paramount signals a couple of things. First, with the huge correction in stock prices of 2022, there are very healthy companies with great balance sheets at a discount right now. Second, huge companies with competitive advantages, or, as Buffett calls them, moats, have the best chance of remaining healthy and gaining market share if the economy runs into trouble. Third, the hype over streaming killing traditional television is overblown. Those are the companies Warren Buffett has recently purchased. Next, what are the companies he's recently sold? There are 2 companies Buffett has completely exited from and a number he's consistently been reducing exposure to. The 2 companies he's completely sold out of Suncor Energy and Synchrony Financial. Let's take a look at each one. Buffett sold Suncor Energy just before oil prices peaked last year. Widely ridiculed for the move at the time because oil was in an uptrend, time has proven Buffett right on this one. Even with China's economy reopening and a war in Ukraine, they have not been enough to stop oil prices from falling. Buffett exiting this company says more about the future prospects of the company than any commentary on the industry as a whole, though. This is because Buffett has since invested more heavily in Occidental Petroleum, so he continues to invest in energy. Next, Synchrony Financial is a consumer retail bank. Buffett exited this company completely and instead pivoted to Aon, which is a business-facing financial and insurance firm. This may indicate that Buffett sees the consumer continuing to weaken and is favoring B2B financials over retail. Buffett has become more selective about his financial exposure, favoring large, well-capitalized companies over smaller institutions. But that's not all Buffett has been selling. In fact, Buffett has sold billions of stock in the last 6 months alone. Let's look at this biggest moves. The first stock to mention Buffett reduced significantly is U.S. Bancorp. This is the parent company of U.S. Bank, which is the 5th largest bank in the United States. Buffett recently reduced Berkshire Hathaway's position in U.S. Bancorp by 92%. This is especially significant because at one point Berkshire was the largest shareholder, and it was Berkshire's largest position. In keeping with the banks, another financial institution Buffett has been selling is BNY Mellon. Buffett reduced his position by over 60% in the last year alone. At one time, Buffett owned 10% of this company as well. These are the two most recent moves of a broader shift away from financials for Buffett. He has also sold portions of JP Morgan and Chase, PNC, Travelers, Wells Fargo, and Goldman Sachs. Some of these companies he's owned over 25 years. The common speculation on Buffett's behavior is that he sees the economy lending standards tightening, making it more difficult for banks to loan money and harder to profit from each of its loans. The next stock Buffett has been selling is Merck Pharmaceuticals. Like financials, Buffett has been steadily reducing exposure to healthcare and pharma during 2022 and 2023. This includes Merck, AbbVie, and Bristol Myers. The last big stock reduction Buffett has recently been on is Taiwan Semiconductors. Buffett sold 86% of his stake in this company. Semiconductors have done very well since, and so once again, Buffett has made a bad short-term decision, but maybe time will tell the Oracle of Omaha right. Selling TSMC was a big shock, only a few months after he purchased his large stake. I'm sure at the next shareholders meeting there will be questions about this. But I wouldn't be surprised if he saw the war in Ukraine and wonders if China will try any similar funny business with Taiwan and doesn't want to take the risk. So let's recap these most recent Buffett moves in a nutshell and what you should do if you want to invest like Warren Buffett. He's been investing in housing manufacturing, well-capitalized companies with /good balance sheets. This is standard, but still good to see these companies exist right now at great prices. Industry leaders at with good moat. Another standard investing principle of Buffett's, but I thought good to reiterate it. Get selective about which financial companies you're invested in. The sectors to look for opportunities to invest in are energy technology and manufacturing. Sectors to look at trimming include healthcare and financials. Looking at Buffett's buys and sells by industry is interesting because in a standard sector rotation strategy, these are the exact sectors you would exit and enter as soon as we've entered a new bull market. You can see here that technology, industrials, and basic materials kick off the beginning of a bull market. These may be industries for you to look for well-priced companies. I hope you enjoyed this video and leave with at least one stock or industry to look further into that you would have otherwise. If so, then great. To get more Top Investor Watch videos, hit the subscribe button now. Warren Buffett is one of the